Hello, everyone, and welcome to your Business Morning this Tuesday, the 12th of February. I am Boasting number 5. We're live to you from Lagos, Nigeria's financial and economic capital. Of course, the big news today is Nigeria's GDP numbers for the fourth quarter of 2018 and full year numbers from the Statistics Office. These are the headlines in those numbers in case you just waking up to this news. Nigeria's economy grew 2.38% in real terms in the fourth quarter of last year. That was the final 3 months of 2018, showing a 0.27% jump over the fourth quarter of the previous year. That's what you call a year-on-year growth. The real GDP growth posted 5.31% on a quarter-on-quarter basis, with the annual growth rate of 1.93% printed for full year 2018. In simple terms, Nigeria's economy grew 1.93% last year. That's it. Aggregate nominal GDP was seen at 35.23 trillion naira, higher by 12.65% from 31.275 trillion recorded in fourth quarter of 2017. What's the full year numbers in nominal GDP? Full year 2018, we got 127.76 trillion naira, posting a nominal growth rate of 12.36% above full year 2017 level of 113.71 trillion naira. If you look at the sectors, that's where you find some of what you call the devil in the details. The oil sector was down 1.6% in the fourth quarter, but added 7.06% to the GDP. Non-oil sector up 2.70%, adding 92.94% to the GDP. Agriculture sector, 14.27% analyzed growth. That's what we saw last year, 23.08% of the country's gross domestic product. Manufacturing sector came in, well, a little bit good, but not too good when you look at the full year. The contribution of manufacturing to the Nigerian economy or the GDP last year was unchanged, 8.86% in 2017 and 8.86% in 2018. That's one big news to look at the problems Nigeria still has with this manufacturing sector. Look at the trade sector GDP, just 1.60%. Full year 2018, much lower than 4.34% for full year 2017. Putting all of this already out there as early as 8:30 this morning, the chief economist at RENCAP, Renaissance Capital, Charles Robertson, put his out on his Twitter handle and says the GDP numbers at 2.4% was good for Nigeria, but it says not good enough to deal with Nigeria's unemployment. These are some of what our analysts will be talking about here on the program this morning. Let's raise the curtain for this 1 hour conversation on the latest GDP fourth quarter and full year 2018 with Taiwo Okwade, who is a partner in charge of tax services at Deloitte, Nigeria. He's live to us here at our headquarters studios, and we have, of course, other guests joining us from our studios at the Nigerian Stock Exchange, where Temple Ashaju, of course, is also there. And, of course, later on the program, we'll bring in the commodities and what does this mean for local consumers when we look at our domestic productive base. Taiwo, good morning. It's good to have you. Thanks for coming through. Give us your initial thought on these GDP numbers, 2.34% against 1.81%, Q3 over Q4.
Yeah, thank you, Bosin. I actually think the GDP number is an impressive number. I believe a lot of analysts were not expecting that growth rate. And if you look at the situation, I think about in top quarter of 2018, I think we reported a growth rate of about 1.8%. So everybody was expecting something around the region of about 2%. So if you have something about 2.38% in the fourth quarter and the whole of year growth rate of about 1.9%, that's an impressive growth rate, even though there's still certain things that have to be done for us to be able to get out of the negative GDP growth rate issue. At the moment, the population is growing at the rate of about 3 to 3.5%. So you can't have a population that is growing at that rate and having faster than the GDP growth rate.
Okay, Taiwo, just hold on those thoughts there. We have the whole 1 hour together on the program. Let's bring in Wale Olusi, who is the acting team lead in charge of research at United Capital, an investment bank listed on the exchange. He's live to us from our studios at the Nigerian Stock Exchange. Wale Olisi, good morning, and it's good to have you with us on the program on this very important day. This is just about a few days to the elections. GDP numbers printing 2.38%. I'm sure you've seen the numbers. What are your initial thoughts on this? Give us your first word.
Good morning, Bosin. I mean, for us, I think it's a positive surprise. 2.4%. Nigeria can do better, but it is a positive surprise for us because for Q4, we're expecting something in the region of 2%. It came out about 40 basis points higher. Agri sector also improved significantly compared to what we saw in the two previous quarters. We think it's a positive surprise. Going forward, all we can think of now is what can we do to sustain even a stronger growth.
Yes, we all want to see stronger growth, Wale Olisi. But again, maybe I'm sure maybe you've seen a few of the details. Oil sector versus non-oil sector. Non-oil sector seem to be moving on that trajectory of growth, but oil sector is still very weak. Came in at a negative 2 point, or just down 1.62% in the final quarter of last year.
Yeah, I mean, even the oil sector growth that remained negative was an improvement compared to what we saw in the previous quarter. Because in the previous quarter, that growth was negative below 2%. But that came to something in the region of 1.9 or thereabout percent. Also, there's a bit more of a momentum in the services sector, which is a huge contributor to the GDP, if you remember, about 52%. So the services sector also, improved significantly. And clearly, in the fourth quarter of the year, which always contributes the largest share to the bucket of GDP, about 27%, we saw that the issues around these headers and farmers' crisis was quite calm compared to what we had earlier in the year. So we think that these are the issues we can think of in terms of why we saw this positive surprise, and maybe these are learning points for the authorities as to how important we need to take some of these things so that we can start reporting the numbers that we really want to see.
Okay, Wale, you look at the nominal GDP versus real GDP. What should folks be focusing on? Our nominal GDP, 35.23 trillion naira. Our real GDP, 19.04 trillion naira. Some folks say, yeah, we should focus more on real GDP than the nominal GDP. What does it mean?
Well, from an economic standpoint, the focus should definitely be on real GDP, because the difference is what happens to nominal GDP when you adjust for inflation. And clearly, general price level has remained, well above single digit. As at December, and the MBS is expected to release the latest one for January later in this week. But as at December, that came to about 11.4%. Average for the year 2018 is in the region of 12.5, 13%. So if you adjust what you call nominal GDP for that, the real GDP will give you the true picture of your output as far as the economy is concerned when you take out the impact of increases in prices. So I think the focus should definitely be on real GDP. It shows you your actual productivity for the year, and the impact of changes in prices, which may not allow you to see clearly, is taken out of the number, so you know exactly how well you are doing as an economy.
Very interesting. The Wale Olisi, of course, you're part of the panel. Thank you very much for this first word on some of the aspects of the GDP. But let's also tell our viewers we have more analysts, of course, on the program this morning to look at this latest GDP numbers. Robert Omotunde, who is the head of research at Afrinvest, is also live at our HQ studios and is weighing in on this very important data report. Nearly 150 pages, and that's what the total is, about 148 pages released this morning. Quite a lot to wade through, isn't it, Robert?
Absolutely.
I've got about close to 50 pages printed here. It's always very heavy.
Yeah,
it's the GDP, isn't it? So it's very heavy meal. I mean, this is not fast food.
Yeah, it concerns the overall economy. So yes. you should expect
yes, so we came in printing 1.93% total GDP for last year, was that far away from some of the projections?
Well, for us, I mean, kudos to AfroInvest. You know, we were right on the numbers.
On the spot. We were right on the money.
Yeah, on the numbers. You know, Q4 numbers expanded by 2.4%. I mean, our projection for the year without import was that GDP was going to come in at 1.9%, you know, on the average for the year. And that was what we witnessed. You know, again, the figures showed, I mean, what we've always suspected in terms of the recovery that we've seen since Q2 2017, when we managed to grow the economy after about 4 quarters of consistent decline. I mean, about 5 quarters to be specific. You know, and what we saw now was sort of a steady recovery. Remember that in Q2 we had about 1.5% growth. You know, in Q3 we were talking about 1.8, and now we're talking about a 2.4%. That was as at Q4. You know, which averaged 1.93% at the end of the year. You know, again, it still speaks to, you know, the much that still needs to be done. You know, when you analyze these numbers across all the various sectors.
Okay, give us one of the breakdown. Because of time, we need to break this down. We know the headline figure, gentlemen, isn't it?
Yep.
Yes, we know the headline figure, but again, let's break it down. We'll talk about oil sector, non-oil sector, agri, manufacturing. Let's hit the ground running very quickly. Manufacturing came in at a disappointing no change in contribution to GDP, 8.8 for 2017, 2018. Is that part of the much work that you think we need to do, Taiwo?
Yeah, I actually think the government is doing a lot at the moment, especially when it comes to the sensitizing people about giving awareness on, you know, what can be produced in the country. What we need to do is, you know, improve on the logistical aspect of moving agricultural produce from where they are produced to where they can be sold to the consumers. I think that is the area where we still need a lot of improvement. The figure is not really looking bad if you really think about it. We are trying to diversify the economy. If you want to develop infrastructure, it takes a while before you start getting the returns of such investment. So I expect something to start happening, especially in the first quarter and second quarter of 2019, especially in the area of agriculture. So I can't say it's all bad news when it comes to the number, but you know we can still improve on.
No, it's not. It's not, because if we look at the real GDP growth in the manufacturing sector, 2.35% in Q4, which was higher than the 0.14% recorded in the same quarter of 2017. Yep. That's a bit of an improvement. Yep. But again, Robert, quickly, what more do you think we should be able to do with the manufacturing sector? That is where we need. We've seen the central bank doing a lot of interventions day on week on week in the manufacturing, both big companies and of course the SME window for FX. So, do you think central bank is doing well on one hand, but of course we need a lot more?
Yeah, again, yes, manufacturing. The bigger picture is looking at manufacturing combined with you know, what happens at the upstream, you know, side of the oil and gas, you know, in terms of manufacturing as well. You recall that. As was reported by the NBS, 8.4% is what you're seeing oil contributing to the economy, right? And manufacturing sector, you know, is printing at about 9.6%. That is, if you back out oil, what you're seeing for manufacturing is 9.6%. And then you compare that with a sector like agriculture, which we know that is primarily, you know, primary sector driven. You know, what I mean by that is that there is hardly, you know, no sort of value that is added at the level of agriculture that we are practicing.
Okay, that's your agriculture.
And that's coming in
2.46% in Q4, but from 1.9% in Q3, exactly, and against 4.23% in Q4. But
and
if
then
you
in
look
contribution,
at
you see agriculture contributing about 25.1%, whereas you see manufacturing at 9.6%. Now, this speaks to, you know, what more that needs to be done. You know,
I get that.
Yes,
yes.
You mentioned
the fault line between agri and manufacturing. Exactly. This is agri growing at about 23% on Q4, and this is manufacturing just doing very
and then again,
lagging.
You know, because we are measuring output, right? And to the point that you're not adding value at the manufacturing sector, you will see that it will continue to drag in terms of contribution to the overall GDP.
So we need to provide that. We need to build that bridge.
Yes, we can
between
do
agriculture and manufacturing. Robert, just a second. Wale Olusi, the acting team lead for research at United Capital live to us at the stock exchange. Wally, what's your thought about this, the missing nexus between manufacturing and agriculture, if you use this GDP, again, as a mirror?
I mean, I like the discussion going on about the nexus that we need to create between agric and manufacturing. I mean, clearly, no economy has developed without, going through that cycle. And critically for Nigeria, considering our, huge agricultural endowment, we really need to invest in, intermediate. We need some intermediate investment that will move us from that agrarian economy to, a more industrialized economy. But, there's a discussion we're having earlier about, what more can we do about the manufacturing sector that, is still not giving us as much. I think a critical factor that we need to consider going forward is this congestion at the ports here in Lagos. Myself and my team, we visited, the ports late last year, to really understand what is happening there. And clearly, it looks like that port is congested. The road network is terrible. There's a lot of, racketeering going on in that axis. And then we also saw what happened last weekend, when the president wanted to visit, how the entire route was cleared, and now, the congestion, the traffic gridlock, everything is back. So I think that axis is something we need to pay special attention to if we are really serious about, driving growth in the manufacturing sector, because being a critical port, apart from the nexus we want to create with agric, where agric supply input that can be, transformed, but Nigeria still need a lot of input that we have to import, be it machinery or some other input. And, if we don't, invest in more ports and we have to rely on this Lagos port, then a quick win for us going forward is how we need to solve that problem as fast as we can. Companies like Flour Mills, Nigeria, Dangote Flour, and a couple of other factories on that axis, informed us that they can't evacuate as much volume as they were before the gridlock started. I mean, apart from that, you have a whole lot of other companies like PZ, Nigeria, and Co., who has notified us that, because they can't move in some of their, input that they import from the port to their factories, things can't move as fast as possible. So I think these are critical things that, authorities must look at if we really need to drive, faster growth in the manufacturing sector. Why, giving enough thought to how we can critically create the required nexus between transforming, the amount of raw material that we'll be getting from our agric sector into, processing it into manufactured goods, then probably selling it abroad rather than what we've been doing in the past, which is more of, exporting agric output and importing manufactured goods, which doesn't create job. I think you mentioned that about Charles Robertson's tweet.
Yes. That's one conversation there. Thank you very much, Wally Olusi. Just that's what Charles Robertson, the chief economist at Renaissance Capital, tweeted, just looking at those numbers as they were coming out of NBS, and of course been tweeted by the NBS statistician general and the CEO, Yemi Kale. Says, look, these numbers were good, gentlemen, Taiwo and Robert. These numbers were good according to him, 2.4%, very nice in print. But he says, well, to quote him, he says, no, it says not enough. And to quote, he says, the last one said, not enough to deal with unemployment. If I put in bracket, Nigeria's unemployment. So let's just spend about some time after the break to talk about this unemployment. But again, we'll still stick with agriculture and commodities a little bit, because we need to find not just what we put in the manufacturing, but what goes on people's breakfast, dinner, and lunch table. This is also very important, because that's one area that we're going to create jobs, and maybe we'll be able to find a way to create wealth as well. Everyone will be back in just about 2 minutes. Stick around. This is your GDP numbers and the analysis of all the data in between. It's your special edition of Your Business Morning.